UPS stock, ticker symbol UPS. Is this the best dividend growth stock to buy right now? This stock is down 11% on the 1-year chart versus the S&P 500 being down 12.6%. So UPS did slightly better in the past year. In the most recent earnings, UPS did beat on EPS but missed on revenue. For the upcoming earnings, 15 analysts voted for a miss, while only 6 voted for a beat. One of the main reasons why people love UPS stock is because of the dividend growth. Dividend yield sits at 3.3%, which is pretty good, and the 5-year growth rate is at almost 13%. But does this also mean that UPS stock is a buy at current prices? Well, in this video I'm going to show you real quickly what UPS does, the most recent report, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does UPS do? UPS is the world's largest premier package delivery company and a leading provider of global supply chain management solutions. If we dive in the most recent earnings report, we see that total revenue is up 4.2% and operating profit is up 7.5% year over year. Operating margin is up 40 bps, which is pretty good. Diluted EPS is up 11.7%. UPS reaffirms the 2022 financial targets with the consolidated revenue around 102 billion. But most importantly, operating margin to increase to 13.7% and return on invested capital above 30%. These numbers look really good to me. The third quarter average daily volume declined 1.5% in the US, which is a bit concerning of course. However, revenue increased because of base pricing and price per gallon. International segment average daily volume is also down 5.2%. But we see that Asia, Americas and US export is breaking the trend and will probably perform the same way as last year. Europe concerns me a bit with the current trend. If we check the revenue segment breakdown, we see that US is by far the biggest segment. Revenue grew 8.2%, driven by a 9.8% increase in revenue per piece. Operating margin was at 10.8%. International revenue increased 1.7%, driven by a 6.4% increase in revenue per piece. Operating margin was 20.8%. Supply chain solutions revenue decreased 6.3% due to declines in the air and ocean freight. Operating margin was 11.3%. So the segment with the lowest margin, US, is increasing quite a bit. But international, which has by far the highest margin, is only increasing a small amount, even with the 6.4% increase in revenue per piece. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. UPS is a 155 billion market cap company, which makes them the largest supplier company in the world. PE ratio is at 13.9, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for UPS, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 101 billion, and in this graph we see that revenue went up quite a lot in the past couple of years. But the question is, will they continue to grow in the same way as they did in the past couple of years? Margins are going up and down a bit in the short term. However, in the long term, margins are up. In the most recent report, margins increased year over year, and it's expected to grow even more in the next quarter, so this is something that I really like. EPS is going up as well in the long term, so again, this is something that I like. Price to sales ratio is at 1.5 right now. It has increased quite a bit most recently, but it's still at acceptable levels, so this looks good to me. Price to book ratio is way too high right now, so this is definitely something to keep your eye on. Price to free cash flow is at 15 right now, which is something that I really like. I prefer this number below 20, but it could be different for each company. Analysts expect EPS to decrease in the coming years, which is kinda surprising, especially because margins are likely to increase a bit in the coming years. Revenue is expected to stay flat in the coming years, which I kinda understand in the short term because of all the things happening right now. However, in the long term, I do think revenue will start to increase again, with more and more people buying stuff online. Return on assets is sitting at 8.2%, which is slightly below my 10% minimum, so this is something to keep your eye on. Return on equity looks quite good. But the most important number, return on invested capital, is sitting at 24%, which is really nice. Especially since it's above the 5-year average. On top of that, UPS expect to deliver a 30% or higher return on invested capital in the next earnings, so this looks really good. Current ratio is at 1.4, which is very nice, since it's below the 1.5 mark that I prefer, so this is also looking quite good. Total debt is sitting at 23.8 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at 11.4 billion. They can easily pay down half of their debt, so this looks really good to me. However, it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And in this graph we see that free cash flow is going up and down a bit. But in the long run it's going up, so this looks good to me. Shares outstanding is going down in the long term, which I prefer. And in the past couple of years they issued a few new shares. However, they started to buy back shares again most recently. And to me it's very important that shares outstanding are decreasing, since it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 3.34%, which is really nice. This brings in a lot of money. Annual payout is a little bit over $6 and payout ratio is at only 43%. I prefer 50% or lower, so right now they have roughly 57% left in cash to buy back shares, pay down debt and all other things. The 5-year growth rate is at almost 13%, which is really high, and they grew the dividends for 13 years in a row. Overall, a great looking dividend scorecard. But does this mean that UPS stock is a buy? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 3.5 and 5%, since I think they will increase the revenue quite steady, but not at the same pace as they did before. Profit margin I'm filling in 10, 12 and 14%. And for the free cash flow margin I'm filling in 9, 10 and 11%. For the PE ratio and the price to free cash flow I'm filling in 14, 15 and 16. Since this is a slow growing company and I don't want to overpay for the growth. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now UPS is at $182. I hit analyze and we do see a few green numbers. We have a low price target of $180 to $131, which is quite a big drop. We have a mid price target of $150 to $181 and we have a high price target of $191 to $243. To me, the mid to high price target is the most justified here. So that means $150 on the low side all the way up to $243 on the high side. But to be honest, I think $200 is the maximum right now. My final conclusion is that I really like the business and the fact that margins are increasing in the long term. I do think revenue will increase at decent levels, but in the short term they might run into some problems. Most fundamentals look great and the dividend also looks very good. The stock isn't really overvalued, but I prefer the stock price to come down to at least $160 before adding shares to my portfolio. Right now I don't own any shares, but UPS is still on my buy list. Hopefully the stock will come down a bit so I have a bigger margin of safety. For now I will just wait and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.